Now let's see how to prepare trading and profit and loss account and a balance sheet by way of an example. The following is the trial balance of Mr. A. We have given a trial balance and some additional information is also given. First one, closing stock is valued at 2,40,000. This closing stock will be credited in the trading account. The next adjustment is maintain a reserve of rupees 10,000 of debtors as reserve for debtors. Reserve for debtors or provision for debtors has to be debited in the profit and loss account and deducted from sundry debtors in the asset side of the balance sheet. The third adjustment is provide a reserve of 5% on sundry debtors as reserve for discount and 5% on sundry creditors. The provision for reserve for discount on debtors will be deducted from the sundry debtors in the asset side and it will be debited in the debit side of the profit and loss account. The discount for sundry creditors will be credited in the profit and loss account and shown by way of deduction from the sundry creditors in the liability side of the balance sheet. The fourth adjustment is stock worth rupees 20,000 destroyed by fire on 25th November 2011, in respect of which the insurance company admitted the claim only rupees 15,000. In the trading account, we have to credit loss of stock by fire with the complete amount of destroy. In the debit side of the profit and loss account, we will debit loss of stock on fire for the unadmitted claim amount. In the balance sheet, we will show on the asset side the claim admitted by the insurance company. The fifth adjustment is that the manager of a business is entitled to get a commission of rupees 10% of net profit after calculating such commission. So, we have to find the net profit and calculate commission. And this will be debited in the profit and loss account and shown on the liability side of the balance sheet. The next adjustment is charge depreciation on land and building, furniture and motor van. The depreciation will be debited in the profit and loss account and deducted from the corresponding assets in the asset side of the balance sheet. The final adjustment is salary paid in advance rupees 3,000. Prepaid expenses. This is a current asset. So we will deduct from the debit side of the balance sheet. Now let's see how to prepare trading and profit and loss account. Trading and profit and loss account for the year ended 31st December 2011. We have a particulars column, amount column, again particulars column and an amount column. So let's start with the debit side. As I have said, the first item in the trading account is opening stock. It's given in the trial balance and we just write it on the trading account. The next item is purchase. If there is any return, deduct that and net amount is written on the amount column. Just look on the trial balance that if there is any direct expenses relating to the factory. There is nothing in this question, so the debit side is completed. Now let's see what are the items on the trading accounts credit side. The first item is obviously sales. There is sales return, so we are just deducting that and writing the net amount on the outer column. The next item is loss of stock on fire. In the adjustment we have seen loss of stock on fire rupees 20,000. We are crediting that. The trading account ends with closing stock. So it's given in the adjustment and we are taking that in the credit side of the trading account. Now the trading account is completed. The next step is balancing the trading account. So we are balancing it. Find the total of the debit and credit side. If the credit side exceeds debit side, it is gross profit. In this question also there is gross profit. Rupees 4,17,480 is the gross profit. So trading account is completed and gross profit is ascertained. What's the next step? We have to prepare profit and loss account. How to begin the profit and loss account? We have to draw down the gross profit. On the credit side, we have gross profit brought forward, rupees 4,17,840. Now let's check the trial balance and take all the indirect expenses on the debit side. The first item, salary. Salary of rupees 44,000. In the adjustments, there was a prepaid salary. So we have to deduct that from the salary and the net amount is taken on the outer column. So 41,000 will be on the amount column. Establishment expenses, rupees 9,190. The next item is stationery, rupees 3,200. Telegram, rupees 1,600. Traveling expenses, rupees 13,800. Sundry expenses, 37,240. Loss by fire, the unadmitted claim of rupees 5,000 is admitted. The next item is interest on bank loan, rupees 6,000. So 6% is the interest on the bank loan.